Hi everyone, thank you for joining us today. We're just going to wait a few more moments for a few more folks to sign on. Thanks. Hi everyone, welcome to the TBR Webinar series. Today, Principal Analyst Chris Antlitz will be discussing the makings of the telecom edge compute market. Before we get started, just a few housekeeping notes. At the bottom of your screens, you can access the slides, audio controls, Q&A, speaker bios, and our survey. After the webinar, you'll receive an email with a replay link as well as a link to view and register for other TBR webinars. If you have any questions for us, please submit them via the Q&A widget in On24. You may also reach out to us after the event at webinars@tbri.com. Thank you again for joining us, and here's Chris to begin the webinar.
Great. Thanks, Sarah, and welcome everybody. Today we're going to be talking about the telecom edge compute market, and I'm using the word telecom because I want to try and boundarize and isolate and put a demarcation around exactly what we're talking about and how we're defining the edge. So for the purposes of this call, we're just going to be focusing on the CSP opportunity in the edge compute market. The findings we're going to be showing in this presentation is key findings from our most recent telecom edge compute market landscape, which just published yesterday. And let's jump right in here. So this is me, and Chris Antlitz, Principal Analyst in the Telecom practice at TBR. And my email address is there in case you want to email me. You can feel free to do so. Before we jump into the material, I do just want to give an overview of TBR and the type of research that we do. So specific to the telecom group, there's different groups within TBR, but the telecom group, we do vendor research, operator research, and we do the market research, which is more of the topical type areas. So edge compute would be a topical area where we do landscapes such as what we'll be going over today. We also do market forecasts, and we also do individual company reports on a variety of companies you see listed here. The Edge is actually one of our newest reports. We just came out, actually this one came out yesterday as our first one, and we're going to be coming out with a forecast in the summer. And we've also launched an IoT market landscape report this year. So we've had some new stuff coming on over the course of this year. So we're going to be spending quite a bit of time on the taxonomy because the edge means different things to different people. And as I've been, myself and my team have been actively researching this market, it's become readily apparent for us that we need to be crystal clear about what we are talking about when we talk about the edge. So we did have to come up with our own demarcation line, and we had to come up with our own strict definitions around how we think about this market. I think that the way we look at the edge is more broad than other analyst firms look at it. So, keep that in mind. I think that just keep those things in mind as we go through this. So essentially what the edge is data centers that are being pushed closer to data generation sources. So this is really about proximity to the data origination source. And the data origination sources could be pretty much anything: smartphones, IoT sensors, VR goggles, any of those things and more could be a data, a data generation source. Could be a PC. We think about this from a telecom lens in terms of domains of the network in their proximity to the data source. So on the chart on the bottom, we segmented out the different domains of the telecom network. So you have your core network, which is a national, usually a national-based network. It's a centralized intelligence center. It could be a data center, an aspect of the core network. There's usually one to a couple of them in a particular country per operator. When we look at the regional and metro edge, that is, higher. You start to branch out from the core, and then you have slightly smaller form factor sites, and they're spread closer to the cities, usually the metros. And usually you'll have, several tens of the regional ones in the States, for example. That's pretty typical. And then for metro, you'll have tens to hundreds in a country like the States. That's not what we're talking about today, though. What we are focusing on in our definition of the edge is the far edge network, which can be called different things. It can be called the local edge, the new edge, the mobile edge, the multi-access edge, the distributed new edge. I've seen these and more ways to characterize it, but essentially they all mean the same thing, which is pushing the compute even closer from the metro deeper into the field. And it's here where we're seeing the edge evolve. And the number of endpoints, the number of edge sites grows exponentially. Could be millions, could be tens of millions, even if you think about it globally. But it could be up to millions on a per operator basis if you think about having compute in UCPE, for example, right? Like an AT&T FlexWare box, as an example. Technically, that, in our definition, is an edge compute device. So just keep in mind those things. Now, what does that look like? So in the far edge network, there's all different types of locations and form factors of the actual compute infrastructure. So some of the more common ones are central offices becoming data centers, otherwise known as CORD. We're going to be talking a lot about that one, and you'll see why when we get a little bit further in this. Head ends for cable hubs, baseband hotels, can be tower at the base of a tower site, and it can be at rooftop sites. That list is not comprehensive. Those are just more of the more frequently thought of locations to put edge compute sites, but there could be many others, even on premise. So you could have edge locations in the presence of, say, a stadium or an airport, right? Where you have a closet that is an edge compute site that is handling, be it mobile traffic that is moving about that airport. So say you have an airport and you want to do, or say you're in a stadium and you want your fans to have access to AR while they're watching the game to enhance the experience, as an example, right? In order to do that at sub 10 millisecond latency, you would have to have your compute resources probably on premise. And we'll get into why, but the point I want to make here is the edge can be anywhere. So our demarcation line is within 30 miles of the data origination source. Now, that 30 miles is not an arbitrary number. So let's move to the next slide here and look at the research parameters. So in our research on the edge, the focus of the content and the data is on the edge compute infrastructure, the spend by CSPs on edge compute infrastructure. And that is including CapEx and external OpEx. External OpEx is spend that is addressable to the vendor community. So things like maintenance, support on the infrastructure. As an example, that would be expensed as OpEx, and we are including that in the market size you're going to see. CSPs, our definition of that is a little more broad than you might see elsewhere. For the edge, it includes telcos, cablecos, shared infrastructure owners, which is companies like tower operators, like an American Tower. It also includes the data center REITs, like an Equinix and a Digital Realty. We're also including cloud service providers. So AWS, Microsoft, Facebook, Google, Alibaba, Baidu, Tencent, Uber, Lyft, Rakatan. Those types of companies, the spend that we think they are going to invest in the edge is included in the stuff you're going to see in this report. And there's reasons why we're including the web scales. Part of the reason is, as we're going to see with our Rakatan example, is that we're seeing web scales increasingly encroaching on the traditional CSP space. So by the nature of how we see the market evolving, we had to loop them into this market size because of how we expect Industry 4.0 to play out. And we see, we're going to see some disruption and disintermediation of the traditional telcos by these web scale players, as demonstrated by what Rakatan is doing in Japan. What we are including also, what we are not including in this is spend by non-telecom verticals. So anybody that's not listed in those parentheses above, we're not including. So enterprise spend on edge compute, say you're ExxonMobil and you're procuring your own edge compute infrastructure to put in your oil fields, that spend is not included. We're also not including on endpoint device compute. So if you have compute in your VR goggles, that is not included in our market size. It has to, the compute must originate from a CSP owned and operated site. The scope of the edge on the next bullet is pertaining to data center equipment predominantly, but not exclusively. So it's not just the data center equipment, which is server, storage, and networking. It's also the services that is attached to or related to that infrastructure. And we're also including edge infrastructure related software. So an example of that is vRAN, virtualized baseband unit. That software, that is going to be residing in vRAN environments. It will reside in edge compute environments. Therefore, we are including that software spend in our market size. So I do want to just say again here, our market size is going to be larger than you're going to see from other analyst firms. And the reason for that is the scope of what we're including is broader than what you'll see out in the marketplace. So I do want to set those expectations up front here. The other thing, last but not least here, is latency. One of the big drivers for the 5G era is low latency, ultra low latency. And when we say low latency, if we quantify that, it's really sub 10 milliseconds. That's what the coveted tranche is for these compute, for the time to compute. And so coming back to our 30-mile proximity, that 30 miles is not an arbitrary number. that is a well-researched and thought-through number. I've personally spoken with PhDs in physics. I've spoken with PhDs in engineering. I've spoken with other very reputable people in the industry. And the commonality in those conversations is that in order to get below 10 milliseconds on a sustained rate, you must be within a certain proximity from the endpoint. And because of the speed of light limitations, that distance, that max distance is 30 miles. So that's where it comes from. Okay, so what we've done now is talked about the taxonomy we're applying in our understanding of the edge market. Now we're going to jump into the content of the presentation. So edge computing is not new. It's evolving, though, and especially so in the telecom industry. So as we saw 2 slides ago, there was the traditional edge. And actually, I am going to go back to that slide. So you see in the middle of that diagram, the traditional edge network. That is the traditional way of thinking about the edge, the regional and the metro edge. That is not new. Those have been around for many decades. What we are really talking about is the evolution of the edge. So if we look at the phases of this market, if we look at the year 2000 to 2015, I characterize that as the CDN era. So video became the major driver of traffic on networks in the 2000s, and we all saw what the iPhone did, right? With the inception of the smartphone and applications and all of the great stuff that has come from that. That has driven the CDN build-out in the edge network as it's been traditionally thought about. So basically what was happening is they wanted to cache the content closer to end users to avoid data traffic bottlenecks and degradation in quality of service. So that was the first, according to what we've seen, this is the first wave of the build out of the edge as we can think about it in the context of this market. Now, where we are in right now is what I would like to think of as the network virtualization era. So literally what this is talking about is the transformation of the network architecture to a more flexible, dynamic, and cost-efficient architecture for the network. So what a key aspect of virtualization and SDN is the disaggregation of hardware and software and the virtualization of that software. That's great. When you virtualize software, that software must reside in some physical environment. Those physical environments can be called NFVI, which is Network Function Virtualization Infrastructure. Literally what that is data centers. So literally what's happening is the network functions are being separated from purpose-built network appliances, which is the historical way of procuring and architecting a network. That's being separated out. The software is being virtualized and it's being housed in data centers. So with that said, that is included in our market size because what's happening in central offices is exactly that. They're being converted into data centers, and that's where the VNFs are being housed. So the spend related to that is included in our market size. When we get to Industry 4.0, we will ultimately get there, but I think it's going to take a little longer than people expect. I'm pegging it around 2025, and that's really when we're going to see edge compute, low latency, start to become a revenue-generating opportunity for CSPs at scale, right? Now there's a lot of experimentation going on, which is great, and that's supposed to happen, but it takes time for the technology to mature. It takes time for the ecosystem to mature. It takes time for business models to mature and become commercialized and scaled. That time frame, it's going to take a few years, right? So Industry 4.0, I think it will happen, but the timing of when that's going to happen, we're well into the next decade. In the interim, the number one justification for CSPs to invest in the edge, especially for telcos and cablecos, we'll get to web scales later, is the cost optimization that they derive from using edge compute rather than central data centers, relying on central data centers. And this is very much tied to the network architecture transformation that they are doing. So the initial build out of the edge is for network transformation and cost savings. That's really in the network virtualization era. A lot of this is happening in central offices, especially for telcos and cablecos. So the cable guys, it's the head ends. The telcos, it's the central offices. Those are the types of sites where this is happening, right? And they're being converted into data centers. In some cases, they're hybrids, right? You'll have the legacy in there side by side with the data center, the newer stuff. In some central offices, you will see a full overhaul to a data center. The leading telcos are that far along in some of their central offices. Usually the larger ones, they have like in the big city centers. Those ones, in many cases, have already been converted by the leading telcos into data centers to house the VNFs, which is part of the transformation. So coming back to that whole idea of how the architecture of the network is changing, is evolving itself. And by nature of that evolution, it naturally pushes and drives the edge compute market. Okay, so let's move to the next slide. This is our market size. And I'm going to talk a lot about this because there is a lot of stuff in here to explain this. So the market's growing fast. We've got it at 75% CAGR and all that. We think it's going to be around $67 billion in 2023. So let's look at the spend assumptions first, and then I'm going to unpack how we got to those numbers. So again, this is the CapEx and external OpEx of CSPs, and this includes the web scales. The CSP must own or lease the infrastructure for it to be included. And the edge compute, that it must be procured by the CSP, right? If it's procured by an enterprise, that is not included in this market size. That's a separate thing. Okay, so let's talk about these numbers. So let's talk about 2018 and 2019. The edge is already happening. So we've already talked about cord. The leading telcos, some of the leading telcos in the world have converted hundreds of central offices in their footprints into data centers. Hundreds have already been converted on collectively. In just 2018, we've had quite a few. We've also had in 2018 and 2019 Rakatan. Now I have a whole slide devoted to them, but the skinny on Rakatan is they are building a greenfield, fully virtualized network across Japan, and a key aspect of that architecture is it's highly distributed at the edge. And they have 4,000 edge sites that are part of that network build. So their CapEx spend alone, not including the OpEx, the CapEx alone for that network build is between $5 and $6 billion total to build that network across Japan. Of that, most of that money is related to the edge, which is in line with our definition of that. So the major driver and the major lift you see from 2018 to 2019 is Rakatan. That's the main driver. Once we get to 2020, we see another big lift. That's going to be China. Now, China is planning to go big on 5G, and they are talking about spending tens of billions of dollars in that market on edge compute infrastructure. And if we extrapolate what they are positioning towards, this is very much part of their own network transformations and the inception of Industry 4.0 in their own market. As you know, in China, 5G is a national priority. It is receiving intense scrutiny by the government there, and they are pushing heavily on the ecosystem to get this out in the field because it's going to foster economic development for their economy. So there's a lot of eyes on this, and edge compute is a key component of the infrastructure development that we're going to see in China as part of their 5G rollouts. And a key aspect of that is going to be vRAN. So vRAN is a major driver of this market size. As we see with Rakatan, which is also using full vRAN across their network, that is a key component of the market size as well. Once we get beyond 2020, I think that we're going to see the web scales get big on edge compute. If we go back in time and look at the inception of cloud, we've had the build out of central data centers. Now, we have massive data centers in the world that are ranked on megawatts in terms of power consumption. These are huge data centers, and they've been highly centralized. That is going to become distributed over time. Increasingly, it has to. Because of how big the web scales are getting in their digital businesses, they have to support their own evolutions, and they also need to get in on new business models themselves. So things like connected cars, connected transportation more broadly, these things will ultimately require edge compute resources in order to get into those low latency thresholds. The central data centers will not cut it when we start talking about getting below 10 milliseconds. It will not work because of the speed of light. So because of that, we expect that there's going to be a big lift by the web scales on edge compute infrastructure in the early 2020s. If you think about it, it's not crazy, the numbers, because today the web scales collectively spend tens of billions of dollars annually on their central data center buildouts. That's today. That's already happening today. So it is very conceivable to think that a portion of that could become edge-related according to the definition we're using if we project out 5 years from now. I think that's a very reasonable assumption to make given where we see some of these companies placing their bets. We see this, right? Google, autonomous vehicles, VR, AR gaming, right? These types of use cases. Mission critical workloads for cloud, right? If you have mission critical workloads that your central data center won't cut it, you need to put a data center closer to that data origination source. That would be edge. Okay, so we're going to keep moving here and talk about some use cases. So, and by the way, I see the questions are accruing in the queue. We are going to take each of those one by one at the end. So if you have questions, just keep adding them in the Q&A chat box. So use cases. Anything that requires sustained and resilient low latency connectivity are prime candidates for edge compute. So I listed 6 here. These are the 6 key use cases I think we're going to see for edge compute initially. The first one is bandwidth optimization. This is not sexy, but the reality is this is going to be a big one. A big one, and this already is a big one, a big rationale, a big justification of why should a CSP invest in edge compute. It is to either mitigate data transit costs. That's the big one, right? So if you think about telcos, in many cases, they will lease a portion of the backhaul that they utilize. They have to pay a toll, basically, to route that traffic through someone else's network, depending on the topology and the requirements around that workload, right? So what this does is it gives the telcos an opportunity to offload some of that bandwidth and reroute it to another location to do the computation. So if the variables align, if the stars align, that could be a key justification to invest in building an edge POP. vRAN. So vRAN is part of the network transformation topic we talked about before, but vRAN as demonstrated by Rakatan, is the next evolutionary step for radio access networks. And essentially what is going to happen there is you virtualize the baseband unit and you put it in a server, right? So that is included in our definition of the edge. So vRAN implementations are going to be a key driver of this market through the forecast period. There is a lot of there's two camps about vRAN. One camp says that vRAN is going to work. The other camp says vRAN is not going to work. I think that all eyes are on Rakatan if they can make this work with Altiostar and a couple of other companies that are actively working on this. If they can make it work, it's going to legitimize the technology, and we're going to see other telcos get big on this in a way they haven't been previously. So gaming is another big one. So especially when we think about AR and VR, things like Pokemon Go, where you have an AR experience there, you would need lower latency. The business model around that remains to be seen. Is the telco going to derive more money from offering that? I don't know. Probably, maybe not. But if you're a web scale and you're monetizing your gaming experience in different ways, that could be a game changer. So we could see gaming emerge as a critical use case to drive edge compute build out. Connected transportation is going to be a big one. I firmly believe that 5G, edge compute, these new technologies, AI, automation, these things are going to revolutionize transportation. And, you know, companies like Lyft and Uber, these guys are looking at these technologies. Amazon is looking at these things for delivering packages and logistics. FedEx is looking at this. UPS is looking at this to get their packages to people's premises in a faster way, right? There's a technology on the back end that's enabling that to happen, right? The edge is a critical component, if you walk that back, is a critical component to whatever infrastructure back end they have to support that use case, right? So connected transportation is a broad segment, but there is a lot of dynamism there, and I think the CSPs have a critical role to play there because of the mobility aspect of transportation. You can't just do on-prem. You need to have ubiquitous connectivity and ubiquitous low latency and resilient connectivity to support connected transportation at scale, right, across a certain topology. So by that very nature, it makes logical sense to assume that the telcos and potentially cable codes would be a key player in the connected transportation. And by way of that, they would have to be investing in edge compute resources to enable and support that. Traffic management, similar. Routing traffic flows, that can be thought of different ways. It could be at an intersection. It could be retail traffic coming into a retail store. It could be people coming in and out of a stadium. It could be people coming in and out of an airport. Watching traffic flows, right? So you got to think about traffic much more broadly than just from a transportation standpoint, a vehicle transportation standpoint. And edge can dynamically and autonomously, deal with that in real time and optimize those flows. So that's another way to think about how the edge could be applied in a use case. And last but not least here, this is going to be a big one, surveillance and security. This one already is to some extent. From the telco opportunity, though, not as much, but for enterprise and public sector, this is already happening. But surveillance and security, so CCTV cameras, facial recognition, these are all things that are requiring edge compute resources within a certain proximity to compute that in near real time. Okay, so let's talk about the ecosystem and the stakeholder types. So there's all different types of players in the edge compute market. We have your telecom operators. I listed some examples here. These are some players. Everybody you see listed here is playing in edge compute. So And these lists are not comprehensive by any means, so please don't think they are. So telecom operators, AT&T, Verizon, Telefonica, all those guys are already investing, spending money on edge compute, according to our definition. Cable operators. One more thing on the cable operators to think about edge compute, which our forecast also includes, is virtual distributed access architecture. So it's literally virtualizing the last mile access network. So if you're a cable co, it's the DOCSIS platform, and that is going to happen. Comcast is already putting that in the field today. Other cable operators are expected to put that in commercial environments starting next year. So that's another key driver that is fueling investment in putting data centers in their head ends and in their cable hubs in neighborhoods. So please keep that in mind as well. Web scales, AWS, Microsoft, Rakatan, shared infrastructure players, I already listed some of them. OEMs, so these are the guys actually providing the physical IT infrastructure. So you've got your well-known names here, Dell Tech, HPE, Lenovo, there's many others. And then you have ODMs, which we will be talking about them in upcoming slides, but these are the whitebox providers. So Inspur, QCT, which stands for Quanta Cloud Technology. By the way, QCT, Rakatan is using QCT's technology in their edge compute environment. So they are using full whitebox in all 4,000 of those edge compute sites. It's all whitebox. And it's all, they're sourcing it from QCT. It's servers and related infrastructure. And then you have Wistron as another example there. You also have a dynamic ecosystem of startups that are coming onto the landscape. So you have EdgeConnects, Mobile EdgeX. Both of those are funded partially by telcos and cablecos. You also have well-known names like Packet and Vapor.io, who are looking to build modular data centers in more cost-efficient manner, putting them in places like at the base of cell tower sites, as an example. Okay, so we're going to talk about Rakatan because they need to be talked about because of the importance of this. And I want to emphasize how important this is. This is a glimpse of the future of where this could go. So Rakatan is building the network of the future, and they are leveraging edge compute at scale to do it. So that image is, on the left-hand side, that image is how they're architecting the network. So they have two central data centers interconnected that are interconnected also with 4,000 edge sites, right? And it spreads off like a capillary system, right? So think about it as blood vessels, capillary system, in that type of a way to think about how that is flowing through the system. And it's all virtualized. Significant aspects of it are cloud native. You could see the stats of it in the bottom there in that gray box. The image on the right is, that's our sketch. First off, that image of the map of Japan. We just sketched that out very roughly. That is not in any way, the actual topology that their network is. So we basically just whiteboarded it out, put it in an image and said, this is what it looks like, right? Think about it this way. You have two central data centers, which are represented by the green dots, and you have a bunch of small edge data centers, which are represented by the red dots, right? And they're all interconnected. So that's all we were trying to convey in that image. So this network is significant because this is the first real example of what this architecture is going to look like at scale across an entire network. And they said they're going to be done by the end of this year. There's some delays that they're encountering, which is to be expected. Nobody's really done this before. But they will work through these things. There's a lot of very intelligent people working on this. And the original timeline to finish the entire network was October 2019. But it's looking like it might be pushed a little bit from there, but that remains to be seen. It's an LTE network. It's a 5G ready network. It is a software upgrade to 5G is how they've architected it. So literally, this is one of the benefits of the new architecture is when the new software comes out for the next generation of RAN, which is 5G NR, all they need to do is inject that into the central data centers, and that pushes it out across the distributed network. And they're going to have a 5G network. So this is a game changer. And they are not the only company doing something like this. I don't want to, but they are the one doing it at the biggest scale, and they're among the first ones to do it. The leading telcos have been doing things like this for the last few years. So like AT&T with its Domain 2.0 program, for those of you who have heard of that, that's very similar. But the problem is the telcos are coming at it from the legacy standpoint where they need to migrate and move off of the legacy onto the new stuff. Rakatan is starting greenfield from day one. So they have a significant time to market advantage getting this off the ground, avoiding any lock-in that being tied down by the legacy, and they were able to do this in a very different way. So keep an eye on this. This is also a key driver of the edge compute spend in the early years of our forecast. Okay, so next slide, vendor disruption. So edge, one of the limitations of edge is the cost feasibility. It's expensive to build these things, right? You need to build enclosures. You got to get access to power. You have to, there's all different aspects and cost inputs required to build out one of these environments. And the cost needs to come down. And there has been significant innovation bringing the cost down. There's been power optimization, so you're getting more power density per rack. You're getting better PUE profiles in those environments. You're getting, there's cost benefits, right? Also repurposing existing real estate, like a central office. That is a cost savings because then you don't have to buy new land to site your data center. You're using a sunk cost. So the same pertains to the actual data center infrastructure. So the servers, the storage, the networking that's in those environments. So what we've got here is on the bottom of the slide, a continuum of ways to think about hardware in this new world. The black box on the far left is the traditional world. I like to think of it as the old world, the old way of doing things. It is proprietary-centric. It is a purpose-built appliances with tightly integrated hardware and software. That is the traditional way of buying appliances that you architect the network with. Gray boxes are have some elements of. Basically, I'm not going to go into each individual one. The point I want to make here is that the market is moving to the right, specifically to the white box. The white box is a commodity box that is stripped down. You don't have a lot of extra features and capabilities in it. It serves a core function, it's general purpose, and it runs VNFs on it very well. And you can run compute applications and whatnot on those. There's a lot of innovation going on in the white box area. OCP and TIP are driving that. So that's a web scale-led initiative. There is a lot of innovation that is tied to that is trying to make white box hardened, more functional, and able to be put into carrier-grade environments at scale where it's resilient and able to be operationalized. So there's a lot going on there. Why? Why is everybody harping on white box? What's the big deal? The big deal is it's way less expensive to buy white boxes versus black boxes. We've done studies on the comparison between the two, and our studies have shown that white boxes are up to 50% cheaper like for like between a white box and a black box. Yes, there's some, capabilities that you have to adjust for. But the point I want to drive home here is, as part of the architectural evolution, a lot of that tight integration between hardware and software is getting disaggregated now. You can run that on whitebox servers, and that's fine. And in fact, when you go cloud native, it's even better to do it that way because you're avoiding lock-in and you have more dynamicism in your network environment. So whiteboxes are making it much more cost efficient and feasible to build edge compute environments. So what we think is going to happen is, and by the way, this is already happening, but it's going to happen disproportionately. So ODMs are going to take disproportionate share of the market for edge compute hardware, and the incumbent OEMs are going to need to become software-centric to stay relevant. We see this, right? We see Cisco moving up the stack, Juniper's moving up the stack. There's other examples as well. Folks, for the sake of time, we are going to need to move on, and I do need to get to everybody's questions. So just real quick, key takeaways here. The edge is not new. It's evolving, though, and it's expanding closer to data sources. Cost optimization is a critical investment driver initially for edge compute. The new revenue is going to come later. The 5G is going to accelerate edge compute ecosystem development. The black box OEMs are going to be disintermediated by the white box OEMs. And Rakatan is a great example of where this is going. Okay, so we're going to go to questions because there are quite a few in the queue. So again, if anybody has a question, please add it. I'm going to go right down the list here and go one by one. So will 5G tower strategy and providers be... yes, we already answered that one. Okay, so you answered the first three? Okay. So in the vendor slide, I saw only traditional vendors. What about newer vendors like AWS, Azure, etc.? Yeah, so I listed the... so for the vendors, specifically, I was focusing on the OEMs and the ODMs for the server storage networking. The AWS's, Azure's, they have engineering teams in-house that spec out the gear, and then they ship the plans to the ODMs to build it for them. So if you think about the model, the source, where they're procuring the physical infrastructure from, is going to be traced back to the ODMs. So the next question is, the sizing is public edge, not private edge, the Exxon example. So the edge is, think about it this way, the CSP must procure the infrastructure. If they procure it and it happens to fall within the demarcation line of our proximities, then that's included in our market size. If it's an enterprise vertical that is not CSP, that is not included in the forecast. It comes down to who is buying the infrastructure and operationalizing it. That is procuring the infrastructure is the demarcation line. Okay, next slide is on the market sizing, includes hardware, infrastructure to support edge workloads and service revenue. It does not include the revenue that CSPs will derive from the edge. No, the market size only includes the infrastructure required to enable the new business models. The next question is, can you define CORD and what are the main differences between a CO and a data center? Okay, so CORD literally stands for Central Office Re-Architected as a Data Center. That term was, I believe, coined by Onos, which is an open source consortium that is putting specifications around what CORD is and the designs around that. So the difference between a CO and a DC, well, they're becoming the same thing, because within a CO, it's basically just a site where you have telecom plant, where you have telecom infrastructure. So you go into a central office building and you'll see racks of infrastructure. It could be your OLTs, it could be routers, switches, the data, but it's all moving to data centers as we move to this new network architecture. So I would say there isn't that much of a difference. They're actually, the COs are evolving into data centers. The CO is really just a way to talk about what the site is. The next question is, what is the breakdown of infrastructure versus services in the market size? So we are not providing that in the webinar, but we do publish that in the report. If you have a subscription to the report, you will have access to those numbers. The next question is, by the way, in our reports that you can purchase, the breakouts we provide is market sizing by black box, gray box, and white box. We have OEM versus ODM. We have spend by CSP type. We have spend by hardware, software, services. We have spend by region. So those are the types of cuts that we have in the actual report. So the next question is, what is the intersection of the 5G market opportunity and edge compute? So it's all part of the architecture. So as an example, vRAN is an example of how radio networks and the edge compute environments are converging, because the BBU will be housed in the edge compute environment. The next question is, do you expect the CapEx to sales ratios of the web scales to be fairly stable as they devote more spend to edge compute? So what I think is going to happen is the web scales are going to redistribute some of what they're already spending on edge compute. We're going to see them start to shift from central compute spend to edge compute spend over time. That is going to dramatically shift over time. And the key reason is it has to. It has to shift because of the new areas they're trying to get into. Central data centers and the latency, it will not work to do things like autonomous driving and some of the other use cases that they're planning to do. So the CapEx to sales ratio, it might go up a little bit, but remember that their sales are growing double digits in many cases. So I think they have bandwidth to navigate that. I don't think it's going to get out of control, right? It's going to stay within a band like it has been. They can manage that. So next question is, who is winning the edge compute battle between tier ones and the telcos? I don't know what your definition of tier one is there, but so there's tier one, it could be tier one telco, tier one cable co, tier one web scale. I would say that the telcos are, from the way that we are looking at the market, I would say the telcos are ahead, believe it or not. The telcos are ahead by the nature of where we place our line in the sand. So the telcos already have significant telecom plant in close proximity to the end users, and they have already been converting some of those sites to edge compute environments as part of their network transformations. So with that in mind, the telcos are ahead of the web scales. I don't know how long that's going to last, but we'll see how that plays out. Next question is on slide 9. You might want to consider technology providers and systems integrators. Yeah, so that's a good point, and yes, so this is our first iteration of the report. We will be adding to it over time, and yes, we will be adding tech providers and SIs. So we've also, in our NFESDN reports, we do talk about SIs and the tech providers, like the VNF providers as an example, in that report, because that's kind of more holistic of the broader architectural transformation that's occurring. That implicates not only the edge, but also the central, the core network. So that's kind of part of the reason why we decided to keep those separate. But yeah, point taken on that. Next question is, in the Japan topology, is the edge node connected to the central DC, or does the edge node reach a data center via mesh type topology? They are using meshing. That's a very specific question. I'm not positive on that. but the reason they had to do 4,000 edge sites is because of the vRAN configuration they're using. That's what I do know. And those are meshed. So you'll have multiple RRHs in the field that are connected into an edge POP that is processing the traffic coming in from the radios. So through that lens, then yes, I would say that it does. But in terms of the central data center versus the edge, that I'm not positive on that configuration. Next question is, how about edge-oriented hardware, such as Open19? Is the marketplace calling for this yet, or is it a white box play still? Edge-oriented hardware. So yeah, white box is already heavily adopted by web scales. The telcos are just starting to get big on white box. Verizon, AT&T, Telefonica, those three are driving significant adoption of white box in their telco environments. So yeah, I think the marketplace is definitely calling for it. So we'll see how that plays out. But I do think that the telcos are increasingly going to be moving to white box for those types of environments. Next question is, how much will be shared infrastructure providers be winners in this transformation? What about Crown Castle specifically? So shared infrastructure providers, yeah, I mean, they have a critical role to play, and part of it is the economics of the edge. So if you're doing colo and co-siting sites, if the REIT already has access to HVAC, power, rack space inside of the building, it's economically feasible to and more cost efficient to site your edge compute environment in that site. It really depends on strategicness of location and the types of workloads you're going to be processing, the relationships you have with the shared infrastructure owner, the master services arrangements you have with those companies. There's all kinds of variables that would play a role in that. But yes, absolutely. The tower companies, the data center REITs, the colo guys, all those guys are going to have a big role to play in this ecosystem build out with the web scales and with the telcos and the cablecos, all of those guys. Next question is, when it comes to the cable space, what about herd? Have you accounted for that impact this could drive in your market outlook? I'm not familiar with that term herd. If you want to give me the spell out of that acronym, I might remember what that is. The next question is, do you have data on the survey methodology and the survey target interviewees? We didn't survey anybody per se for this. This is based on conversations we've had with people in the industry, so like the PhDs in physics and engineering, as I mentioned earlier. We've also talked with many different vendors across the ecosystem. We've talked with operators. We've had briefings with many companies. We've also attend the events like Mobile World Congress is a key one, and other industry trade shows we attend. So that's kind of where we get a lot of the insights that go into our market sizing. And also we do a deep dive into publicly reported materials that are put out by the ecosystem players. So we look at 10Ks, 10Qs, annual reports. We look at earnings reports, earnings presentations, investor presentations, all those types of things factor into our research methodology. And okay, I think that was the last question, and it looks like we are at the top of the hour. So Sarah, I'll hand it over to you. All
right. Everyone, please feel free to reach out to Chris with any follow-up questions. If you have a few moments, we would appreciate if you could fill out the survey on your screen. A replay version of the webcast will be available after the event and will be sent out to you via email. To view a list of our upcoming and past webinars, please visit tbri.com. Be sure to join us Wednesday, June 26th for Where Will Hyperconverged Infrastructure Fit in the Modern Data Center? Thank you and have a great day.